Hello fellow traders. Today we're going to get into the most overlooked pattern that can yield dividends. Today we're going to go into recognizing the rectangle pattern by Pajama Trader. Let's get into it. Recognizing the rectangle pattern. Rectangle pattern highlighted by Johnson & Johnson's price oscillating between approximately 185 and 192. Representing a consolidation phase characterized by indecision, as neither buyers nor sellers control the direction. The chart will show repeated touches of support resistance, confirming the pattern. The new support failing to hold emphasizes looking for a breakdown as consolidation nears its end. Identifying the box consolidation pattern, making note of how the price repeatedly tests both support and resistance levels. Both swings confirm a rectangle and often precede a significant move. The visible annotation on the chart draws attention to the importance of this phase in trade planning. Confirming the pattern with volume. As you can see in the box here, you can see where the volume failed and it also crossed the resistance but quickly went back towards, the new support made by the resistance. Rectangle patterns typically see volume decreases as the price tests the boundaries. And in the Johnson & Johnson chart, volume contracts as the price swings between support and resistance, signaling traders are waiting a decisive breakout or breakdown. Notice the declining volume bars under the rectangle zone, a classic sign of market indecision. Count each price bounce within the rectangle, noting how the volume drops during these swings. Volume contradiction precedes a strong resolution, a spike that's needed to validate the next move. Waiting for the confirmed breakout or breakdown. The trading signal comes when the price closes decisively outside the rectangle zone, confirming by increased volume. With Johnson & Johnson or J&J, watch closely for a breakdown below 189 as suggested by the chart that I noted. Confirming helps avoid losses and false moves. Patience pays off. Wait for a candle to close outside the box with clear volume confirmation. Premature entries and risk whipsaws losses. Wait till it confirms, and that also means joining with momentum and not guessing. Practical trade setup example. So I wanted to cover this rectangle pattern I saw in Johnson & Johnson. Started about 179 and ran up to about 191. And from what you can see here, it had a volume spike taking it into the box and continuation volume, keeping it there, pushing it to higher highs, breaking resistance at 191. But then the next day it broke down, next day gap down after that. And then you had this break to new highs and then cracked the resistance and through support. And then you have the following day, you have it cracking through resistance, but wind up closing below the resistance level. So when you look at the volume, you can see it's trading on lower volume since these events. And when you see something like that, you can set up a trade and be able to profit nicely when you see these patterns. A textbook short trade sets up as follows. Enter when the price closes above 189 support with high volume. Set a stop loss above the rectangle resistance at 192 and set a target around 182. The rectangle height subtracted from the breakdown level for a measured move. This follows the pattern dimensions for risk and reward planning. Map out entry stops and targets, just like on the Johnson & Johnson chart. Volume confirmation is essential. Never trade breakdowns on low volume. Always use stops and manage risk and set clear profit targets for each trade. Avoid common trading errors. Common mistakes include entering trades within the rectangle or without volume confirmation and neglecting stop loss discipline. After a breakdown, price may retest prior support, giving a new entry for a better exit point. Waiting for a retest is often safer. Stress the danger. I can't stress it enough, I guess, of the impulse trades. Wait for confirmation and practical retest. Use stop diligently. Learn from each lesson. Take notes and reduce large losses. The Johnson & Johnson breakdown and the retest model offers a great learning opportunity for future trades. Next steps in review. Practice identifying rectangle patterns and marking boundaries on price charts. Track volume closely and simulate trade setups with entry, stop, and target points. Journal these exercises and share the findings to improve pattern recognition and trading planning skills, or watching videos like this. Learning comes from hands-on and practice. Use the current Johnson & Johnson action as a template and observe long trading plans or short setups in every trade, and also including missed trades to deepen the technical skills. Thanks again for watching.